What is going on, guys? Welcome back to another video here on Forex with Cody, my YouTube channel. And today we're going to be going over structure, right? Market structure, how to read market structure, how to anticipate a reversal, and how to fine tune your trading strategy if you're having problems or struggling with reading market structure. And first of all, I want to show you guys this indicator that I've found, and this is something that you can incorporate into your strategy to help you read market structure. And it's something for those guys out there who struggle to understand how to read market structure and you find details of what it takes to be accurate when reading market structure yourself. And so I did a little deep diving on TradingView to find something that can help you guys read structure a little bit better and more precisely and consistently, right? Because that is the key. One day you could open the charts and say, you know, you could do your analysis and make this a higher high and this a higher low, but then the next day you come to the charts and you're going to think, well, actually no, look what happened with price, that wasn't right, so I'm going to change today and I'm going to instead do this and do that. Whereas if you have this indicator, it brings consistency and it brings a solid base point for you to start from when doing your analysis. All right, so first of all, what this is called is, if we have a look right here on, if you go to your indicator section, you're going to want to type in what was it, let me just wait for this to load. My computer's being a little bit slow right now. Okay, it is called pivot points high low, right? HH, HL, LH, LL by Anand, right? And it's by Mohammed Anand right here. So type this in, type this exact name in, pivot points high low by Anand, Mohammed Anand, okay? And then add that to your charts. And what you're going to get is this. And you see it comes up with pivot high, pivot low, and I've changed these numbers to 12, 12, 12, 12. And of course you can use whichever colors you want to use for that. That's completely up to you. But what you want to do is have this first one checked, and you want to uncheck the rest of these, right? Don't have any more of these checked. Same thing here, turn off top chaos, bottom chaos, breakout, breakout. I'm not sure what these are, I've never used them. But the main thing is that you have on 12, 12, 12, 12, okay? And what that basically is 12 links to the left, 12 links to the right. I'm going to show you, if you're not into indicators, right? If you want to be more of a manual trader and do these things yourself, I'm going to show you exactly how to do that, right? And basically what this is, pivot points, right? So it's 12, 12, 12, 12. This is a range of 12 candles to the left and 12 candles to the right. So what you want to do, bring up your trendline tool. Okay, so your trendline tool is right here. Okay, if you go to the left, you see this section under lines, and trendline is the first one. What you want to do is click settings, and you want to turn off everything within this trendline tool and just turn on bars range. Okay, bars range, have that one checked. So now what that does, when you're drawing out your trendline tool, it just shows you the bars range. Okay, very simple. So what you're going to do is take your trend line and you're going to go over to points in the market where price reverses. Okay, so we can very clearly see that here we have a wick, a high, and then price reverses. And what you want to do is just grab your trend line and just count out 12 bars to the left, right? 12, 12, exactly like the indicator said, and 12 bars to the right. Now, for a lower high or higher high, is there, or a high structure point, full stop, is there a higher candle? 12 bars to the left, so 12 candles to the left. No, there's not. There's not a higher candle. Is there a higher candle 12 candles to the right, or 12 bars to the right? No, there's not. So this is a valid structure high point, okay? Lower high, or if it's a higher high, whatever it may be. Same with this. Is there a higher candle 12 bars to the left? No, there's not, right? Because you can see this candle right here comes up, but it doesn't break that high, okay? Is there a higher candle 12 bars to the right? No, there's not. So that is now another valid structure high point, lower high whatever you want it to be. Let's try these ones over here. So if we have a low point, right, lower low, which it says right here, the indicator, LL, is there a lower candle 12 bars to the left? No, there's not. Is there a lower candle 12 bars to the right? No, there's not. So this is now a valid lower low or low structure point. Let's try this one. Obviously, there isn't a label underneath this one, but for those guys who are getting confused, let's do this one. Is there a lower candle 12 bars to the left? No, there's not. Is there a lower candle 12 bars to the right? Yes, there is. Right, 12 bars to the right, we have a lower candle, a lower low right here. So this is not a valid structure point. Okay, makes sense? Same down here. 12, 12. Is there a lower candle than this low? 12 to the left, 12 to the right? No, there's not. So that is now a valid structured lower low point. Okay, so now that we understand this, we're going to go over here and I'm going to show you some examples here, right? So here we can see price is clearly an uptrend, right? We can see higher lows, lower highs being broken, higher high formed up here. Higher low formed right here. So higher high, formed here, higher low formed here. Price is in an uptrend, right? Price then forms this lower high point. Now, at the back of your mind, you could be thinking, okay, we've formed a lower high even though we're in an uptrend, and really price should be coming up here to break this higher high, but it doesn't. It stops here and creates a lower high. So now in the back of your mind, thinking, okay, this could potentially now flip bearish, right? But first of all, what needs to happen? Price needs to break this higher low point, right? Because price is in an uptrend, and this is the structured higher low point within the uptrend that if this gets broken, indicates we now are in a downtrend. And so what happens is price ends up breaking it and retesting it, okay? So we now know price has broken that bullish structure and is potentially in a downtrend, right? What you can wait for is you can go down to the 4-hour time frame. And let's have a look at the retest, okay? So here we get a clean break and retest. And what I have on my rectangle here, my support and resistance levels, is the midline. You can see that, the midline. I'm just going to make that a little less aggressive. So you can see I have middle line checked. So that just brings up the midsection of this rectangle, right? And where I drew that was from the low to the body of this structure point, this higher low structure point, okay? From the low wick to the body, I've drew that structure point. And then if we go down to the 4, we can see the clear break and retest, okay? So prices broke the daily bullish structure now. We've broke it, retested it straight to this midline, okay? And you don't want to take a trade until price reaches this midline. If price coming in here and rejecting, we're not worried about that. We're waiting until price reaches that midline, and then we can look for entries, okay? And here you can see you get a big bearish engulfing candle on the 4-hour time frame. But of course, you still get a 1 to 2 from that, but you've missed out this whole move from up here, right? So we can go down to the lower time frames, maybe the 2, and we can check for a engulfing candle or some form of price action within the 2-hour time frame. And here you can see we get one on the 2 as well. Might be down here, sorry. It's probably going to be the same scenario. You get a little bit more out of it. You get a 1 to 3 instead of a 1 to 2. Again, you can go down to the 1-hour time frame. I wouldn't suggest going any lower than the 1-hour time frame while looking for entries, because of course this is based off of the daily. And here you can see, right, price reaches the midline of this zone, okay, and you have a very strong bearish engulfing candle. Now stops you want to put above the wick of course that bearish engulfing candle, or if you want to be a little more safe, you can go just above the previous lower high structure point, which is up here, of course, as price broke this low down here, right? So price took out this lower low point, right? So the lower low here, price took it out. So the most recent lower high from there was this point up here. So we can have stops above there. Now let's see what that changes our risk to reward to. A 1 to 4. Okay. A 1 to 4. So, of course you held it longer, price would continue bearish after that, right? Because obviously this is a break of structure on the daily time frame. You can expect quite a big move, right? So let's go back to the daily and let's take a look at that. So now price has broken that bullish structure, right? We've broken, retested that higher low, and price has moved down. Now price has created a lower low and pulled back, right? So what will we be looking for? We'll be looking for trend continuation at this point. Where do we look for that? We look for it with a break and retest of this level, okay? And something you can add as confluence here now is a fib, right? Because price is trending down, we want to add a fib. We have a lower high structure point and we have our lower low structure point. Price retraces perfectly to that fib, also to the previous level of structure, the lower low. Okay, so it broke it, retested the lower low, retested the Fibonacci level. Okay, and also look where it comes to, the midpoint of the zone. Okay, so now we can go down to the 4 hour, and this just depends on your trading style, right? What you want to which time frame you want to use as entries. You can use the 4, you can use the 1, the 2. Like I said, I wouldn't recommend going any lower than that, right? Any lower than the 1 hour time frame. So here we can see price eventually then comes into the mid-level, rejects, right? And we're looking for a bearish engulfing candle. Comes up again, rejects, and then we get the bearish engulfing candle right here, right? There's no engulfing candles over here. This is the bearish engulfing candle. Price can then go above that most recent high, right, like that, probably rounded up, I don't know, 200 pips maybe, just above it. And then you want to target that previous lower low structure point, okay? Previous lower low down here, because you know from the daily perspective, price is now bearish. We have created a lower low, right? A lower high, another lower low, a potential lower high. So you know eventually on the daily time frame that price is going to come down and create a lower low, right? So your first target, of course, could be the previous level of structure, the previous lower low, but then you want to anticipate that it breaks it and creates a new lower low. So you could put your first take profit here at a 1 to 5.5, and then you could do it a little bit lower, potentially a 1 to 6, right, for your second take profit, because you anticipate that price from the daily perspective now, the daily structure is going to come down and break that previous lower low and create a new lower low. All right. So again, 1 to 6. Again, if you want to go down to the 1 hour time frame and find a better entry, you could potentially do that. We go in here and we look for a bearish engulfing candle once price hits the midline, which is right here. Right? And this is where it can get a little bit tricky, right? If you want to put your stops above the previous high, you can do that. Above the zone. But if you're gonna go onto the 1 hour time frame and take engulfing candles and then put your stops above the high before the engulfing candle, then in this scenario you would get stopped out, right? So that's why I prefer the 4 hour time frame for entries. If you want to just enter right there, right, and put your stops above the zone, that could be something you could do as well. And in that scenario, you would end up getting less of a risk reward, right? On the 4 hour time frame, we had a 1 to 6. On the 1 hour time frame, we have a 1 to 5. Something else you could potentially do, right, is just put a sell stop right at the mid range of that zone, right? Because you know that once price hits that mid range is where you're going to be looking for sells. And so you could put your sell stop there, maybe even half position right there with your stops just above this zone, something like that. And then potentially get another entry once you see some better price action there, right? So in this scenario, you'd potentially have got like a 1 to 8, 1 to 9. But of course, price does end up dropping and continuing for like a 1 to 11 risk to reward ratio. Over like 1,700 and 1,767 pips. This trade would have gotten you in total potentially, right? Let's go back to the daily and let's keep going, right? Let's have a look for some more. So this was the trade right here, right? The break and retest. Does price continue, right? So now we have another lower low, a lower high point, right? This is the trade that we just caught right here from this level all the way down. Okay. Now we're looking for more sells, right? So we have the previous lower low structure right here. And as you can see, price breaks and retests, but it doesn't come into the mid-range, right? You can see it just misses the mid-range of this zone right here. So we wouldn't have looked for any trades at that point. And then price does a deeper retracement, right? And of course, price is still bearish as long as it stays below this lower high point, right? So overall, it's still bearish. But like I said, we could pull out a fib, right? Let's pull out the Fibonacci from the lower high down to the new low. And we can see that this level is now, this lower high, lower low level, right, is now invalid because prices broke above it. We're not too worried about that anymore. We're looking for different areas of structure that we can use. And here you can see from the fib, if we drew it out, you can see we have this level right here to this level right here where price is rejecting, right? So price created a resistance and a support. Okay, so it broke it, had support here, broke it, retested it, and drove down to the downside. And you can see that price did then eventually come up into that level, the Fibonacci, right, rejecting the 618 Fibonacci. So this could be a potential level for us right here, okay, from here to here, right? And if we draw it out to the left, we can see that we have support, resistance, support, resistance. This is a nice level to potentially take buys from. And if you wanted to incorporate some more of it, I don't know, like this, you know, to get more of that resistance in, that's completely up to you. Because we don't have a level of structure to go from, so we can't go from a low to a body. We're kind of just going off of a general support and resistance level, which lines up with the 618 Fibonacci. Then you can kind of make the level make a bit more sense. So we have support here, resistance in here. It could be something like this, all right? So then we have price that comes into it. We know that price is still bearish, right? We know that this pair is still bearish because we have bearish structure from the daily. We've come into it, so we can look for sales from this key level, right? From this key resistance support level. So again, we can go down to the 4-hour time frame. Wait for price to reach the mid-range, which it does. And then we wait for an engulfing candle, which we get right here on the 4-hour time frame, right? And you can put your stops above that high that was formed over there and round it up. Just put it a little bit above right there, maybe 200 pips again, right? And then again, what we want to do is target that previous low, right? Which we do, target the low for a 1 to 4, where you'll take profit, or almost a 1 to 5, right? So you could take profits down here and then anticipate that price is going to create a lower low, right? So you could do a 1 to 5 or a 1 to 6 with anticipation that price is going to continue this trend to the downside and make a lower low. That doesn't quite happen. But like I said, you would take profit 1 down here at this level, right? So you'd come into this level, you take profit 1 for a 1 to 4.6. You can see price beautifully rejects that mid-range of this zone. Yeah, mid-range right here. And then bounces off. But beautiful trade, right? We got in over here. Or again, if you want to enter the trade straight from the mid-range of this support resistance level, like I mentioned before, maybe enter half your position, put your stops just above for 150 pips, right? What that now gives you is a 1-to-7 risk to reward ratio. Okay, and you can manage that accordingly. And then enter your other position, enter half your position there, and enter the other half of your position with that engulfing candle right there. Yeah, and then get your 1-to-4. So again, market structure, right? We're now adding confluences such as support and resistance levels. We have the mid-range of that level where we want price to tap into. We're looking for engulfing candles. We're matching it up with a Fibonacci, structure, everything, right? Beautiful. Now, what happens? We now have a structure point over here. A lower high formed on the daily, yeah? We have a lower high formed on the daily right here. We can draw out that level. What happens? Price breaks it. So we've now broke this bearish structure. Okay. And now, boom, taps it. We look for a retest. We go down to the 4-hour time frame. We wait for price to tap into this mid-range. And like I said, if you want to put your half your position right here, right at a buy stop at the mid-range of that level, stops just underneath for 50 pips, right? And target that previous high for your take profit 1, okay? Right there. 1-to-11 risk to reward ratio. And then anticipate that it's going to create a higher high, maybe just slightly above, for a 1-to-13 risk to reward ratio, right? Beautiful trade. If you don't want to get in on the buy stop at that mid range, you can wait for the bullish engulfing on the 4-hour time frame, right? And you'd put your stops just below like that, and then again target the previous high. You still get 1-to-2 risk to reward ratio for your take profit 1, and then of course anticipate that price is going to create a higher high, maybe for a 1-to-3 risk to reward ratio for 600 pips. Yeah, and then you get a 1-to-3. So still works either way, but I find having a buy stop with half your position, or at least some kind of position here, can get you in the trade nice and early. You can have really tight stops, right? Really tight stops underneath there. Like I said, 50 or so pips. And then you'll target that previous high, right? Beautiful, 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 beautiful. So that is the other example. If you want to go down to the 1-hour time frame and look for a better entry, you can also do that, right? But it looks like price just wicks off this level on all time frames, and you don't really get an engulfing candle here on the 1-hour time frame. So the 4-hour time frame wins again. All right, back to the daily. Where was that? Where was that? That was over here. Okay, so now we have break of structure, retest, price continues bullish. Yeah. And now we have this uptrend that's formed, right? Uptrend, 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 uptrend. And you don't get another structured high point until right up here. And if you wanted to draw out these levels, you could potentially do that, right? But I wouldn't suggest it. So what you can do is now wait for your structure points to form. So we have a higher low and a higher high, right? Draw out the fib, look for a retest in these levels. Doesn't quite come down into these levels. Creates a high high and continues bullish. We now have this higher high point, right? And we get the break. We can look for the retest. Let's go down to the 4-hour time frame. And here you can see, right? Price breaks above, comes for the retest. If you have half your position here, right, at the with the buy stop, with stops just underneath, you're going to get stopped out there. Right? You're going to get stopped out. But price comes in still in an uptrend. If we have a look at the 4-hour time frame, price is also still in an uptrend. We have higher lows being formed right here. Right? If we draw out 12 to the left, 12 to the right, we can see that is still in an uptrend. If we look on the most recent higher low point on the 4-hour time frame is all the way down the bottom here. So 4-hour, of course, is still bullish, right? We haven't broken any structure on the 4-hour time frame. and we have a higher low that was formed here. Price then breaks back above, coming for another retest, closes below, right? So then you can wait, right? Comes back in, closes above, and then we get a bullish engulfing. So you can enter here, or you also have another retest over here, right? Either one is good, in my opinion. You can put your stops below here and target, of course, this previous high, right? Where you get a 121.8 and then target a potential higher high, right? Because now we have the higher high over here from the daily perspective. And you can target a potential higher high there for a 1 to 2 or a 1 to 3, whatever you want to do, okay? And then, of course, you would have made 2% on this trade because you would have lost 1% here by entering a buy stop when price comes into the mid-range. And then, of course, price does continue a bit more. But yeah, still making profits, right? 2% right there. 700 or so pips, okay? Back to the daily. And you can see how we're just going through structure points, right? Just going through structure points. Very simple. We have higher highs, right? And price is still continuing bullish. We can now draw a fib from the low point up into the high point, okay? Over here. So we have a higher low, higher high. Price is still in an uptrend. And now we can see price coming back into this level. If we look to the left-hand side for a nice support and resistance level, we potentially got this one in here, right? Which the midline perfectly lines up with the 618 Fibonacci, right? Because we don't have any structure points over here where we can look for a retest. We've already had this level, but it didn't hold too well. We now have a Fibonacci and we need a strong support and resistance level, which we have over here, right? We have one resistance, support, resistance, support. Now price coming back into this level, right? With price still being in an uptrend, and you can see price perfectly comes to the mid-range here, which is also the 618 of the Fibonacci. If we have a look, which one's right over here, right? The price comes in, and price comes into the mid-range, right? Again, if you want to have your buy stops here with your stop loss just below this level, right? And then you can potentially target previous highs in the daily market, which is over here, which would be a 1 to 7-ish, right? Don't quite get there. Or if you want your entry, I mean, you still make, what do you make here? 1 to 4 risk to reward ratio. If you didn't want to enter there, you can wait for an engulfing right here. You get one right here, you get one right here. You get multiple bullish engulfing candles with your stops, you know, below wherever, right? Below this level. If that's the case, you would make almost a 1 to 3. And your targets up here would be around about a 1 to 5 or a 1 to 6, right? Price ends up then, obviously you'd be at break even at this point. You'd be like a 1 to 4 risk to reward ratio, 1 to 3 risk to reward ratio in profit. You'd move your stops to break even. Price comes down to your break even and also breaks that previous level of structure on the daily time frame, right? So where are we? We are over here, okay? This point. So price, this is the level of structure right here, right? So we can see 12 to the right, 12 to the left. There is no lower candle, so this is a valid structure low point, higher low in uptrend. Then price creates a lower high, right? Again, within the back of your mind now, you're thinking, okay, price is in an uptrend, but it's created a lower high. Interesting. Then price comes down and breaks this high low point, okay? And you don't get a break and retest. This is not much of a break and retest here. It just closes below, then closes back in. What you want to see for a break and retest is what we saw over here, right? This kind of, so here we have a break and retest of this level, okay? You see it cleanly breaks it, comes for the retest, right? Very nice break and retest. Here we can see cleanly breaks it all the way up and then comes down for the retest. In this scenario, right, it just barely closes below and then boom, closes back in and pushes back up. So we wouldn't get an entry there, But we do know that now price has broken bullish structure and has now flipped bearish from the daily. So what do? We take our lower high structure point down into our new low structure point. We draw out that fib, right? And now we have this level, okay, in the market, the 618 Fibonacci zone. In terms of levels that you could draw here, potentially this one, but there's not really much on here apart from potentially like this level maybe, right? So we've got like, we know that this is the 618 zone in here now. We've got the Fibonacci lineup, right? And over here you can see we have support, 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 price broke below, resistance, and then continue bearish, right? So we could draw up something like that. The most recent structure point, we could down to the 4-hour time frame if we want, and have a look how that looks on the 4-hour, and maybe tidy it up a little bit. But I would say that looks pretty good in there, right? If we wanted to do something like this, maybe we could do that. Support, 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 resistance. Yeah, so we could potentially do something like that. So if we want to take that from the daily or 12-hour, that's up to you, right? So then when price comes into this level, we can, if you want to have your sell stops, right, with stops above, you potentially get stopped out first of all. But if you want to wait for an engulfing, we have a couple of engulfings over here, 1, 2, right? So if you wanted to take that one, stops above these levels, again, you'd probably get wicked out. Now, this is why I would stick to drawing your levels from the daily time frame. I'm just giving you different options that you could do and seeing how different scenarios play out, right? But this is why it's important to, I say, just draw your levels from the daily, right? So from this support over here, the bodies, to the bodies of the resistance down here, okay? If we go down to the 4-hour time frame, it's going to look much cleaner and you're going to be able to get a better entry, right? So again, if you want to take that, if you want to take the sell stop at this level, because if you think about it, when we're drawing the support and resistance from the daily time frame structure points, we are not drawing them from the 4-hour at all. We're taking those levels from the daily, right? So it's important that we just stick to the daily for our levels. And of course, we have our sell stops here, right? Stops just above the top range of this zone. And then again, you target those previous lows, right? So that's a 1 to 6. You can see price comes back to close to our entry. Wouldn't have taken us out at break even here, right? So you can target those previous lows for a 1 to 6, and then maybe a couple more above that for a potential lower low structure, right? Because we have a lower low, lower high, and you can anticipate that price is going to come down and create a lower low. If you wanted to draw the fib on that and use the fib level for that, then obviously the fib level will be down here, right? The minus 236, right? You can draw it to that. So that'll be a 1 to 8.47. Okay. Beautiful. Right, so we have a fib lined up with a strong support and resistance level from the daily, with a daily market structure, lower lows, lower highs. We have rejection. We have the mid range of this zone tapped, and then of course, like I said, if you're wanting to wait for engulfing candles, we have it right here, right? But of course, you're going to get slightly less risk to reward here, right? The first target you would get a 1 to 4-ish. The second target you'd get a 1 to 5.5, which is still really good. It's still 837 or so pips, and then of course price continues down after that for over 1,000 pips, and finally creates that lower low. Okay, so that is another example, beautiful example. And then what do we have, right? Price comes down, creates that lower low. We are looking for retracements. We're looking for a retest of this level. And as you can see, price comes in, shoots straight past this level, starts pushing up. And what happens? Price breaks this lower high structure now. Okay, we have a lower high structure. in the downtrend, right? Lower high, lower low, lower high, lower high, lower low. Bang. Now we are bullish. Okay, now price is bullish because we broke lower high structure and created a new higher high over here. Okay, higher high. So now what we're looking for is a retest of this level, right? We don't quite get the Fibonacci line up on here. We could, if price does break at this level, then you can anticipate that price could come down lower into the fib level down here, right? So that is another target you could look for. But as of right now, we're looking for a retest of this previous structure point, right? So we have our level from the daily. We have our mid-range of the zone. If you wanted to enter right here with a buy stop on the mid-range of that zone, with your stops just below this level, right? Something like that. 100 and, I don't know, 120, 130, maybe just round it up to 150 pips. And then target those previous highs up here. Okay, 1 to 4.5. And then a higher high, potentially 1 to 6. If you wanted to just bump that up by a couple more risk to rewards to get that higher high in, because we have a daily higher high over here. So you can anticipate that now price is in this trend. We're going to create a high, higher low, and then a higher high, which is exactly what happens, right? And again, price continues up for over 2,000 pips here on gold for a 1 to 13 risk to reward ratio. Okay, so yeah, very simple again, break and retest, right? And then again, if you didn't want to get in on the mid-range, you would look for an engulfing candle, which you get right here. It stops again just below this level, 200 pips. And in this scenario, you would have got a 1 to 3, still very good, 600 pips. And then go for a 1 to 5, anticipating that price is going to create a higher high from the daily perspective, which it does. Okay, beautiful. Beautiful trades, beautiful trades, right? You can see how simple this is and how much this plays out, right? So now we have a higher high, higher low, higher high. Price is well and truly in an uptrend, right? We can look for a break and retest of this level, first of all. And then as you can see, price comes down into this Fibonacci zone, the 786 zone. So first of all, we'll look for a retest of this higher high over here. So price breaks it, comes down. We'll look for a retest. We also have the 618 Fibonacci as confluence. So let's first of all take a look at that on the 4 hour. Okay, so here we have the level, the break. Not quite enough of a break and retest for me, but as you can see, it does come into the mid-range and it gives an engulfing candle. If you put your stops below this level, right, and you're already at the higher high over here, so you don't really know how far you can go there. So you would wait for the proper break and then retest over here. But then as you can see, price shoots straight through this range and the mid-range and continues bearish. Not before it retests to the mid-level, right? So it breaks it, retests, taps that mid-level perfectly, right? And then drives to the downside. Something else for you guys to potentially look at, right? And in that, you would have got like, what, 300 pips, 1 to 10 risk to reward ratio. But that's for another day, right? That's now structure on the 4 hour time frame broken, right? So the structure on the 4 hour time frame got broke. So you can see a higher low, lower high, break, retest, sell off, right? But that's for another video. We're just focusing on the daily at this point. So we don't get any trades in there. But like I said, Fibonacci, right? From the higher low to the higher high, price is in an uptrend. We have a level right here where price could come into, right? So we need to find a nice support and resistance level. We need to find a strong level within the market. So what I'm going to do is what we want to do is find a nice level of structure. Okay, so what we have here is we go from there to there to there. Resistance, support, support, or there's this one, which I think. So going off the most recent structure, we can see in here, so that's important, right? The most recent level of structure, we can see that in here we have a support, right? So you can see price breaks up here. We can also see to the left, if we just bring this level over here, we can see we have resistance, support, resistance, right? Breaks as resistance, then breaks above, acts as support, and continues bullish. So that is the most recent level of structure. So you just want to draw some kind of zone in here where it kind of makes sense, right? So you can see we have the bodies of these candles right here. Okay, so the bodies of this support. We also have the bodies of this support, and then this incorporates this. So this could be a nice structure point from the daily perspective, which lines up with the 786 Fibonacci, which you can see we get a retest of. So again, we can look for trades because why? Price is still in an uptrend. We have higher highs, higher lows, higher highs, and we're looking for a retracement now into the some kind of structure point, some kind of level of support where price can bounce, which lines up with the fib, right? So we have multiple complemences in there. So again, that's what we have, right? So we have the higher low, higher high, price retraces into this level from the daily perspective. Price is still bullish. If you want to put your buy stops in here, right, with your stops just below this level, say 100 pips, and then you can target that previous high over here. And that is a bit extreme. This was obviously from news this week, so I would maybe target the bodies of it, as you don't really want to target this whole wick. Maybe just target the bodies of that one right there. And again, that is a 1 to 10 risk to reward ratio. And then potentially if you wanted to target like a new higher high, you would go up here somewhere. But of course, like I said, this is a very extreme wick. This was obviously news or something. So in this case, I'll probably just take profits here at this level and just see what happens around this wick, because obviously that is something that is not normal price action. This was obviously news event based price action. So yeah, you can either potentially take profits all the way there at a 1 to 10, take most of your profits off the table, and then maybe just target that top wick for your second take profit for a 1 to 16. Completely up to you. But yeah, again, another example, right? Using clear market structure, key levels. If we look to the left, we can see this is a clear resistance as well, right? We can see there's a very clear support and resistance. So we have support here, right? Support, resistance, 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 support, resistance, support. So we know this level is valid, right? We know that if price comes into this level, which lines up with our Fibonacci, like I just said, lines up with the fib. Okay, in here, boom, perfect. Support and resistance zone, key level, Fibonacci, daily uptrend, daily structure, price action, right? If you wanted to wait for the price action, you get a bullish engulfing candle right here. You enter off of that bullish engulfing candle, stops below, probably around about 200 pips. And then in this case, you get a 1 to 5 risk to reward ratio. Okay. So that is the market structure video on how to confidently and comfortably read market structure based off of bars range, right? 12 bars to the right, 12 bars to the left, using the daily time frame as your structure, as your analysis time frame, and the 4 hour. And if you want to go down 1 hour, but I suggest sticking to the 4, So using the daily for your structure and your levels, your support and resistance levels, and the 4 hour for entry, right? Your bullish engulfing candles. And again, if you, like I said, if you wanted to enter from the mid range of this level, that would give you a much better risk to reward ratio, as you'd have a much tighter stop loss, right? 1 to 10. Or if you wanted to potentially add half your position there and then wait for price action engulfing candles to add the second part of your position, you can do that. There's multiple options for you, but that is the strategy on how to read, on how to trade market structure and how to read market structure. And of course, you can go down onto any time frame and do this, right? You just mark out your 12 bar range left and right, find your structure points, use them to understand if the market is in a downtrend or an uptrend, and then look for breaks and retest of those levels. Line it up with the fib, chuck an EMA on there if you want to add extra confluence. Key levels from the daily, add the mid range to your support and resistance levels by just clicking this midline right here. Only enter once price comes into this mid range. Only then can you look for your engulfing candles, or if you wanted to take your trade straight from that level, that's completely up to you. Have a look, have a back test, have a play. Let me know what you think in the comments. Thank you guys for watching, and I'll see you in the next video.